Hi everybody, this is Kyle Thompson with Tomson Burnham Real Estate. I am a real estate agent in Salem, Oregon, right in the heart of the Willamette Valley. And we are now into October, so it is time for my third quarter market report. The Fed has now been raising interest rates aggressively for 2 full quarters. So we're going to take a close look at how our local market has been affected and see what some of the experts are expecting from the market in 2023. So stay tuned. Start off by first comparing the third quarter 2022 numbers with the third quarter of 2021. As I've mentioned in one of my previous reports, real estate does have seasons, and so each quarter acts a little differently from the rest in terms of real estate activity. So comparing identical quarters 1 year apart takes out any variation caused by the time of the year. But because interest rates have risen so quickly, I'm also going to compare some of the third quarter 2022 numbers with the second quarter of 2022 so we get a snapshot of how the market is shifting in the short term. Keep in mind that we're looking at the numbers for our entire MLS, which on top of Salem includes many of the small cities near Salem. So the first metric we're going to look at is total number of units sold. As you can see from this chart, the total number of homes sold last quarter was 2,314 units, down over 850 units from the third quarter last year, or about 27%. This is a big drop. Now, the third quarter of 2021 was still pretty frantic, so the 2021 numbers were artificially high, but the third quarter of 2022 is low compared to every third quarter over the last 5 years. Total sales was also significantly lower than the second quarter of this year. There is no way around it. The real estate market here has slowed considerably. Next, we're going to look at median home prices. Median home prices have increased 14% to $444,000 over the third quarter of 2021, almost exactly the same increase from the second quarter of 2021 to the second quarter of 2022. But when you compare the median home price from the second quarter of this year to the third quarter, prices actually dropped. They didn't drop much, only $1,000, but we have been seeing 3 to 6% increases from the second quarter over the third quarter for the last couple of years. So at least over the last quarter, prices have flattened out. Our next metric is days on the market. And days on the market has increased 6 days to 55 days from list to close from 1 year ago. In the second quarter of 2022, the median days on the market was 48 days. While this seems like a significant increase, when you look at the data over the last 5 years, 55 days to close is right in line with the historical numbers. So this metric has not really changed much at all. Lastly, we're going to look at absorption rate. Absorption rate is measured in the number of days it takes to drop to zero inventory. So if there is a 30 days of inventory, if no new homes come on the market, in 30 days, inventory would drop to zero. In the third quarter, the absorption rate jumped up to 63 days from 25 days in the third quarter of 2021. Now, an absorption rate of 25 days was an outlier and far too low a number for a healthy market. If you compare the third quarter of 2022 to other third quarters over the last 5 years, while it is higher, it is not a lot higher. And remember, a balanced market where there's an equal number of buyers and sellers, you will see an absorption rate of around 180 days. So on the surface, it seems like while the absorption rate number has gone up, it is still a strong seller's market. And this is where looking at the quarter over quarter data is useful. In the first quarter of this year, our absorption rate was 10 days. In the second quarter, it popped up to 34 days, and in the third quarter, it went up to 63 days. So while that third quarter absorption rate may tell us that we're still in a seller's market, the trend line, if it continues, tells me that it's only a matter of time before we start officially calling this a buyer's market. So what can we expect as we head into 2023? The consensus among local industry experts is that we will see an additional 10 to 20% drop in transactions in 2023, but prices will hold steady. We still have a lot of folks moving to the Willamette Valley, and we already have an acute housing shortage. There are not enough single-family homes for everyone who wants to buy one. Inventory is going to be depressed. Only folks who have to sell are going to. Nobody's going to trade their 3% mortgage for a 7% mortgage unless they have to. I hear from many buyers that they are looking for a great deal. They are reading the national news where there's a pretty constant drumbeat of doom and gloom for the real estate market, and they think they can buy a home here for fire sale prices. We are a ways away from fire sale prices around Salem. Homes that are completely move-in ready are still getting multiple offers at asking price or above because there are so few of them. Homes that need work, however, are sitting on the market, and we are seeing significant price drops. My very latest transaction was such a house. It had been on the market for 3 months with no offers, and my folks got it for $35,000 below asking and $10,000 in closing costs, plus additional concessions for repairs. That kind of deal was unheard of just 6 months ago. Bottom line, low inventory is supporting home prices, but the higher interest rates have taken so many buyers out of the market that it is much easier to buy a home today than it was earlier this year. If you are willing and able to take on a house that needs work, buyers are in the strongest negotiating position they have been in for many years. And that, folks, is my third quarter market report. If you liked what you saw here and want to see more, hit that subscribe button you see on your screen and you'll be alerted when my next video goes live. See you next time.